Well, it's a big day from an equity market watcher's perspective, from a humanitarian crisis watcher's perspective as well. But we'll focus on markets, economy, and investing with Mihir Vora, needs no introduction, Director and CEO of Max Life Insurance, joins us right now. Mihir, thank you for agreeing to talk to us. How difficult is it to comprehend the impact of something like this on risk assets?
Well, absolutely impossible, almost, I would say. This is one of those days where most likely whatever you do buy or sell is going to be right as well as wrong. If it's right in the short term, it's probably wrong in the long term. If it's wrong in the short term, probably right in the long term. So this is one of the days you just kind of bunker up and see what's going around and hope for the best.
Yeah. Are you, I mean, I'm sure you're trying, I mean, in some ways, because of the large assets that you guys manage, you must be trying to make some sense of what implications could this have in the near term for equities. One is, of course, the obvious risk off that may come in and which we are seeing today. How far can that last? And any thoughts on this?
So as you rightly pointed out, the risk appetite, global flows is one big factor. The second big factor we are observing is oil and commodity prices, because that's a negative for India, because oil is now, as we speak, almost touching $100 a barrel, and most of the other commodities are also creeping up. Not only because Russia is a big producer of commodities, but Ukraine also is a big producer of commodities, both agri as well as metals and other commodities. So we have this whole commodity complex which can get impacted, in the sense go up, so to say, which is typically not great news for India, which is mostly a consumer of oil and a lot of these commodities. So that's something that we are watching very closely. The third implication is on the currency. Both of these commodities complex, oil and the global risk appetite will impact the Indian rupee in more than one way. So these are some of the moving parts that we are trying to grapple with. But the good part is history shows that these kind of shocks are sharp and fast. So it won't be a long drawn out affair, as we have seen a lot of times in the past. And once the markets go for a reset, like today, maybe a few more days, then the reset sets the base for the next move of the market. So that's something that again we would like to kind of wait it out and see how it goes. We have we keep some dry powder all the time. Obviously, it's never enough for these kind of situations, but we pick and choose them.
You are beginning to do that today itself, Mihir, or are you biding your time?
No, today is the first day. So typically you won't just want to take a call now because the news is even not half out. You don't really know what's happening and the second and third order implications of what's happening in the world. So probably not a good time to go in and be kind of aggressive about things. It'll at least take a few hours to digest the news and the implications and see how it goes.
Yeah, well, viewers, I hope you understand that. I mean, also the point I'm trying to make, a lot of maybe very sensible people have said that, oh, today is the day to buy because equities have fallen. I think these are wise words of advice. Do try and analyze a little bit before just putting out because of various, you made this point. I got this data about how during various past instances, including World Trade Center bombing or Kargil war or 9/11 or Iraq war, how 12 months out, things look very, very okay. So even this will, maybe it will, hopefully it will, but still. Just a couple of quick questions, Mihir. One is the commodity complex piece that you mentioned. Now, on Bloomberg, the Vitol chairman mentioned that there's a very high probability of oil prices staying above the $100 per barrel mark for the next 3 to 6 months. In the event that such a thing would happen, from a macroeconomic perspective, it could have a fairly large and profound implication on India, even if the conflict situation dies down, right?
Absolutely. That's the reason why I said, we are not going all out, today itself, and because there's so many moving parts. Oil is the critical input for us in terms of the net imports that we do. It adds to our currency pressures. It adds to inflationary pressures. So it can have implications on RBI's policy and mindset also in the next meeting. So there are lots of these interconnectednesses that we need to think through.
Got it. Yesterday we were speaking to Julius Baer, and they were saying that while the known impact of what the conflict will do is one thing, but they were also of the opinion that if indeed the conflict dies down sooner, um, and if the inflation print stops surprising negatively, then they use the term a probability of a violent move upwards. Do you see a probability of that at all?
Absolutely, and that can be a function of how violent the move downward is too. So, but definitely, I don't envisage a situation in which one fine day it's declared that the situation is over. It probably get panned out over a few days rather than one particular day, I would
Of
say.
course.
But markets tend to be more violent, of course, sharper than the actual news flows. So a bounce back or a sharp rally cannot be ruled out. Once things negative news stops coming in, so to say.
Got it. Last question. You're brilliant with numbers. I've seen it on your Twitter account as well, the analysis that you do. Just wondering, the fair value for Indian equities, and it obviously keeps on moving now with crude at 100, and who knows what will happen ahead. It will move again. But as things stand, ceteris paribus, if we are at 100, the conflict is lasting, doesn't do too much harm, but oil at 100 and the commodity complex doing what it is. What do you think is a value, or is are the levels from where you would start thinking of deploying some bit of gunpowder into various pockets, of course, but still wondering?
So till a couple of days back, when we were not sure whether oil would sustain at these levels or go higher, I would say probably around these levels was already a fair time to get in. But with this risk of oil and inflation, and of course the risk of potential that can happen if the situation gets drawn out, I'm comfortable with the levels, but probably timing is what I would kind of elongate a bit rather than going in currently.
Okay. Very good. What are too many imponderables, so I won't even pinpoint you down to any other specifics, but this was lovely talking to you. Thank you so much for taking the time out today and giving us your insights.
Always a pleasure. Thank you, Nilesh.
Thank you. And viewers, thanks for tuning in.